Welcome back to my channel. Today's topic is top analysis, aligning with structure together with it. Before I start any of my class, I always try to give a shout out to my coach. Yeah, he's a very good man, and I always appreciate him for always correcting and guiding me. It's not just to find a coach that takes their time, but I'm grateful for him and for his encouragement to always encourage us to teach other people too. Now, I want to show you how top analysis is being done, and to me, this is the whole thing you need for a full top-down analysis. You need your main swing, you need your swing structure, that's your swing time frame. You need your main time frame, and you need your entry time frame. That's three time frame. But starting down from 1 month, I have a shift of market structure, external range liquidity, right? External range liquidity, that's for 1 month. And we have here, if you look inside here, this is the highest point and this is the lowest point, right? The highest and lowest point, that means there's a structure here, right? Now if I look inside here also, I will see that price shifted structure here as a form of mitigation block, taking it from this lowest low to this high. We realize that what happened, price is at what, 50% of this what, Fibonacci, right? But now we are in premium and price is at discount. Until price does this on what, 1 week time frame, that is our main time frame. Until price does this on 1 week time frame, should we know that we have gone bullish. But also we are standing on what, another block aligning with what, a fair value gap. If you look inside very well, there's a fair value gap here. So the structure is not fully bullish. The structure is not fully bullish till this high has been taken out. But from in here, we know that we are actually changing bullish, but it's not fully bullish till this is taken out. Now, I come down to the main time frame structure, right? Now, for me, I will take the 1 week as my swing structure, and I'll take the main structure as my 1 day for those that are swing trading. Now, what do I have here? On 1 week time frame, know that price also respects other block, sorry, fair value gap. I have a full retracement here as an external range liquidity, right? Buy side liquidity, and I have what here? I have a sell side liquidity, right? On 1 week, taking my Fibonacci from this low to this high. Now price is above 50%, right? We have a breaker here which price has what, violated already. And what do I have inside here? I will go with this my rules here. Is there a breaker block? Yes, there's a breaker block, but below 50%. Is there a mitigation block? I won't call this a mitigation block. Is there an order block? Yes, there's an order block here. We have an order block, the last candle before the impulse move down. Is there a rejection block? Well, I'll say a tiny one above here. Is there a liquidity void? No. Is there a fair value gap? There is no fair value gap around, but above 50%, no fair value gap, but it's close to our optimum trade entry area though. Is there liquidity void? No. Is there an old low or old high? Well, I have here these old lows that are here, and I have an old low here as liquidity also too. So what will I do? Don't forget also that on 1 month time frame is showing bullish, but here we're bearish, price want to come down. Now until price does this on 1 day, I am still going to be bullish to the upside. Until price does this on 1 day, it means I'm still bullish until 1 day changes structure around here. And the only decision reference point I can see is just the other block, right? Will I consider this bearish to take out this old high, old lows liquidity? Now come down to what? I'll delete this Fibonacci now. I have my zone, my point here guiding me, right? Now, if I look here, don't forget we're counter trading from 1 week, right, into this whole mighty big zone. I have what here? I have a shift of market structure here, right? That's our buy side liquidity of 1 day, right? 1 day. And what do I have inside here again? If you look inside, there was an internal structure again. Can you see? There's an internal structure again as another, so buy side liquidity. And what do I have here again? I also have what? A break of structure. Okay, that is two candle. No, the last break of structure is this one here. So from this low to this high, don't forget our retracement. We're told we should use three candle retracement, right? So indirectly, this is liquidity. This is liquidity. So we have this. What do we have here? We have this high to this low to this high, because what? This had only two candle retracements, two body candle closure retracement. So price came down for this candle here, and we're expecting more buys ahead, right? Now, going to this rule, what I have here is just order block, no fair value gap, but we had liquidity that price came out to sweep on 1 month time frame, on 4 hours time frame. Now you see how we moved it, right? We're following the momentum from 1 week to 4 hours and everything, right? Now where's my other sign? Good. Now imagine your swing structure is 1 day and your main time frame is 4 hours, right? Your main time frame is 4 hours. Price has tapped into what? Into a sooner reference point here. You can see it, right? One, this is just one, two. Would I call this a change of character? But I'll call this a shift of market structure up here. This is a shift of market structure on 4 hours. Now, for those that want to swing trade, you can get here and take this entry. You'd have been in the trade a long time ago when price shifted structure around here. You'd have been in the trade a long time ago when price shifted structure around here, creating this whole liquidity. You can see it, right? Price created this liquidity, created inducement equal low and tapped on it. But for those that are trading 4 hours time frame, right? Those who want to day trade it can go down there, Fibonacci, from this low to this high. But if you look inside here, you see have what? A mitigation block around here, and we're waiting for price to come down to that level. If price there wants to come down for us, we also have a breaker block here. But what do you see? The breaker block what is on premium, but some individual might still take the trade, but to me it's still risky. You see that? And price came what? Price thought, let's see what price wants to do. This how top down analysis is kind of very sweet. We know that 1 week is bullish. We are looking at what 4 hours is doing. And you can see also here is also going to be very scary. Why? Because there is also a sweep of liquidity here, and we have an order block. So there's tendency that there's going to be a rally in that area. Price is respecting it with a fair value gap. Can you see that there, right? Another block with a fair value gap. And let's see what price wants to do. But the range is from this low to this high, right? Let's see. Can you see that, right? Price came to what? This fair value gap below. Price came to this fair value gap below. Price used this other block to push itself down. Don't forget the range. Let me delete this. The range is from here for 4 hours to this level. And if I draw my Fibonacci from this low to this high, you can see price came to what? Optimal trade entry zone. Price came to the optimal trade entry zone. Some individuals might decide also to what? To what? Get a good entry, look for a swing points violation, which we have here, price sweep. And some people might enter this zone aligning with this fair value gap. For those that are day trading, we have a small fair value gap here with this swing point being violated. It just depends on those that are entering the trade from those that are day trading. But those that are swing trading would have been in the trade from here, right? When the price shifted structure from 1 day, those that are swing trading would have been in the trade from here. But we that are going to day trade and also swing trade it to just wait for price to retrace back here into what? Optimal trade entry. Can you see price tapped on what? 68 what? 68 point what? The optimal trade entry 61.80 to 79%. Optimal trade entry zone for a good massive buy, and you can see it's pulling up there for what? We expect more to enter what? The more of the buys to enter what? The 1 week zone. Now I took this analysis from 1 week, 1 day, 4 hours, and I can also do it 1 day, 1 hour for if I want to trade the daily time frame. But if I want to just do the normal time frame of being a day trader, I can do 4 hours and 30 minutes, or 4 hours and 15 minutes, or 4 hours and 5 minutes. It just depends on how you want to go about it. But you can use this guide. If you mark your swing structure, sorry, if you mark your swing structure, let's assume your swing structure is weekly and your main time frame is daily, you are entering on 1 hour. If you mark your swing structure as daily, your main time frame is 4 hours, and you can enter either at 1 hour or 15 minutes. So I hope this top down analysis video kind of helpful. Follow the step: breaker block, mitigation block, order block, rejection block, fair value gap, liquidity void, old lows and old highs. And don't forget to use your premium and your discount when marking your zone. Thank you so much.